Well, a new report released today by the International Energy Agency says the growth of oil supply will slow to 1 million barrels per day this year, while at the same time, global oil demand will hit a record high, driven by China's reopening. For more perspective, joining us now is Andrew Lipow, president of Lipow Oil Associates. Thanks so much for making time, Andrew.
Good afternoon. Thanks for having me.
So expectations for record demand here from the IEA, what are you expecting?
Well, I do believe it is going to be a record led by increasing growth in China as well as other parts of the world. But the reopening of the China economy and the easing of lockdowns, we're expecting significant increases in, number one, jet fuel demand as their domestic travel picks up, and gasoline demand, number two, because the Chinese drivers will take to the road.
Can you walk us through the timeline that you're expecting on that? Because the announcement of the reopening came quite quickly, but in terms of the reaction that we've seen in the price of oil since then, I mean, it hasn't been that pronounced.
Well, that's right, because the oil market thinks it's going to take several months, I think, till the middle of this year to really see a significant increase in Chinese demand. Right now, they're going into their Lunar New Year holiday. We do expect jet fuel demand to increase as their domestic travel picks up. But as far as the rest of the economy, they're still bedeviled with some supply chain issues and the like, which is preventing them from increasing their oil demand significantly right up front.
What do you think is the most important thing for, investors to be thinking about on the supply side of things, where that oil is going to be coming from, where there could be potential opportunity there or maybe challenges in the year ahead?
Well, of course, that is the big question, because in 2022, the oil market was relying on the drawdown of the Strategic Petroleum Reserve here in the U.S. and other reserves around the world. And that added about 700,000 barrels a day that the oil market is now looking for. When we think about the most stable political climates in order to increase your oil production, you're certainly looking at Canada and the United States. And then after that, we see a significant amount of production increases in Guyana in South America, where Exxon and Hess have continued to ramp up their production.
And when we think about supply being impacted potentially by those sanctions on Russian supply, you flagged Russian diesel as well. What should we be thinking about when it comes to Russian diesel?
Well, this, of course, is the biggest issue in the refined product markets, because the European Union had been importing between 700 and 900,000 barrels a day. Now, unlike crude, where Russia was able to sell that to India and China, those two countries are actually exporting diesel. So what you need to see is Russia try to seek out new markets, which is called Central and South America. If they're unable to do that, there's really going to be a worldwide scramble for new diesel supplies, especially as we await on the commissioning of new refineries in the Middle East as well as in Africa.
Weather has been a really interesting factor this year in terms of the demand side for energy. I'm thinking of Europe and a bit of a breather there with some warmer winter weather, at least to start the year. But then there's also been more severe winter weather, like in the U.S., and that's impacted the production side of things. So when you're thinking about just sort of the timing of all of that, and then when you put China into the picture and, like you said, perhaps not seeing that demand ramp up until, later this year, maybe mid-year, it almost seems like it's happening in a sequence that might allow for the demand and supply to kind of meet where things are needed. Though I do know that supply is a lingering issue.
Well, what we're thinking is in the first part of the year, the supply is going to be exceeding demand, and then as we get to the second half of the year, the reverse takes place. And that's why I think we'll see higher oil prices later in this year rather than in the front, because we do have all of these competing things that are occurring, between the demand side of the picture The consumers, we saw December spending be less than expected. So we know that consumer budgets are tight, and that, of course, impacts overall economic growth. But as we go through the course of the year and things return to a more normal type of growth pattern, certainly we're expecting that we're going to run into a supply deficit of oil that can really only be cured with higher prices.
So what are you thinking in terms of the price of oil this year? I don't know if you're thinking where it's going to end up or where it might, average out at the end of the year. I was looking at the 1-year average over the past 1 year, and it was about $94. So what are you thinking going forward?
Well, I think by the end of this year, we're going to see WTI at $90 a barrel and Brent crude oil at $95 a barrel, which means the average for the year is going to be $5 to $6 a barrel, less than that. I think you'll find that most investment banks are projecting that Brent prices are going to average this year somewhere in the neighborhood of $95 a barrel, because the market is really quite focused on the supply side of the equation, and to a lesser extent on the bearishness that may be precluded by a recession around the world, impacting demand in a negative way.
It's interesting, Andrew, because we were just looking in the Canadian inflation data yesterday about gas prices coming down and, the relief on the consumer side of things. I mean, if you're looking at more expensive oil prices, potentially that could be, more fuel to inflation as well.
Well, it certainly is bad news for the consumer when I'm expecting oil prices to rise. And of course, that's going to bring higher gasoline and diesel prices along with it. I think some of the good news for the consumer in North America, as well as in Europe, is that natural gas prices have come down quite substantially, especially with the warmer weather that we're experiencing. And that should put an ease on some of the utility bills that they're going to be seeing coming forward.